Today is Thursday, February 1, 2024. It's about 8:48 a.m. Eastern. The market opens in about 45 minutes. And there are 6 levels that have been put on the chart to trade against in the E-mini futures today. And of those 6, there are 2 that are dotted or dashed lines. And that is because they are not the typical formula-derived levels. They're still important in their own right. But if the spiders get to those levels, then partial position size of the E-mini should be considered. Currently, the pre-market, they are at 485.36. They've kind of climbed 30 or so S&P points overnight and been bouncing around. A lot of movement. So it'll be interesting to see what happens at the end of the trading day, but we will look at the market. We'll look at this chart after the market is closed and analyze any and all trades taken in the E-mini futures. Well, the market's closed. It's almost 9 p.m. The spiders fought back and regained all the ground that they lost from the drop yesterday. They got above and closed the day well above that line in the sand that we talked about for a couple of days now. So let's examine how sticking to the rules of this strategy allowed us to pull 4 base hits out of the E-minis as they made their trip back up north. I could just leave the chart where it's at. I just adjusted the levels with a 5-cent buffer for each of them. So the first trade was activated it was a long position in the E-minis when the spiders got back down to 484.20. They actually got to within 6 cents of this level in this 10:01 a.m. candle, and that would not have activated a trade with an order keyed into the system. But this morning I was a little more hands-on, and I actually had a limit order in the E-minis for half the number of contracts that I usually trade at a level that was roughly the same place as a corresponding level in the spiders. It was just a chart order, as you've seen before. The limit order in the E-minis was a tick or two higher, apparently, because when the spiders made this little whip down here at 10:01 a.m., it filled the order in the E-minis before actually touching the level. And I really should have been paying more attention because I was looking away, working on something else. And when I saw that the order was filled, I quickly added the base hit profit target in the E-minis as a limit order on the chart. And it got filled as soon as I plotted it on the chart. It was a little lower than the 4-point base hit that I wanted, but because price shot up so fast here, provided more than enough, the base hit, as you can see, but I was just a little bit late to the game. In any case, they came back down to this level, the same level later. And if you were relying solely on the E-mini order to trigger the moment the spiders touched 484.20 and you didn't get filled because they came up 6 cents short, well, you would have had another chance when they came back the second time. There are parameters that define a near miss, and had they come back a lot sooner than they did here, this would have been a near miss, and you might not have wanted to try again on a future retest at this level. But when they did come back down, plenty of time had elapsed, and this would not have been considered a near miss in the playbook that I use, at least. But enough about this trade. So in the meantime, I mean, it was in the bag for me here anyway. In the meantime, the next trade was up here at 485.96. That was a short when the spiders came up and hit it from the underside. That trade worked very well as designed, hardly out of the money at all before they handed over the base hit when they pulled back. After taking profit at these 2 levels, they are no longer worthy of consideration for other trades in the day if the spiders hit them. That's just the way I like to trade them. So it wasn't until almost 1 p.m. when the spiders got up here. The next trade was triggered. It was another short when the spiders hit 487.70. It took a couple minutes being out of the money before they reversed and handed over the base hit. But that worked as well. And so with this level satisfied, I wasn't interested in anything they did around this level, or the one below for that matter, because these trades were already in the bag. I'm looking for them to climb higher to the next level, where the next order activation was, or to fall a long way down and get to the next untouched level. So as it turned out, they kept climbing. And so this last trade of the day was at 3:05 when the spiders hit 488.81. Another picture perfect trade. They pulled it right back after the order was triggered, provided another base hit, and that was the 4th profitable trade of the day. And notice that most of these trades were counter trend plays on the short side as the market melted up. This should just be a good indication to you that these levels aren't just arbitrary places on the chart. They are important levels that are systematically calculated every morning, and under normal conditions, the spiders will react to these levels in the majority of the time. And when you take advantage of these reactions by trading the E-minis correctly, the moment the spiders hit the levels, that's a recipe for consistent profits. Not much to explain here. Here are the 4 levels that provided the base hits. So 4 base hits at 16 ES points. 16 ES points is a fair amount of money for one day. And we did have that loser at the beginning of the week when we hit the maximum loss limit, but we've more than made that up. And so far, those last 2 weeks have been really good. We'll see what tomorrow brings. I hope you found this information interesting and helpful. If you like these videos, please like and subscribe so you can get more notifications for more videos as I post these daily recaps. Thanks and have a great day.